Scary to see over 6 million defaulting on mortgages since real estate crash in 2009 to the 2010 preceded Bitcoin. What is the impact of a crash similar, if not worse, magnitude 2025, 2026 on our investments, primarily Bitcoin and MicroStrategy, Solana, and Tesla? First of all, Chewy, 6 million aren't defaulting on the mortgages in the United States. 6 million people are behind on their mortgages. So we don't have the same setup as the global financial crisis. And global financial crisis was bad, but the market dip we've just had is actually worse, which has triggered some people like Dan Ives called it a self-inflicted wound. All this tariff stuff that's going on, way worse than expected, and the market's very rattled. But let's get into why it is a little bit different this time around. And I do not see it as a global financial crisis. And I'll tell you why exactly. First of all, if I can get my little picture to show up. First of all, again, it's different this time. Last time we had a global financial crisis, you had every Tom, Dick, and Harry buying 2, 3, 4, 5, 6 different investment properties because the rates were so low. There was also no underwriting rules in place, so they're just giving out money willy-nilly. They were doing these exotic brokerages, no money down, very low initial interest rates, and then they jack the rates, etc. And it's a very, very different time. The underwriting standards are higher. Households and banks have better balance sheets today. We don't have all this collateral lending, CDS stuff that we had back then, which triggered the cascade of foreclosures and losses and brought down big financial institutions. That will not happen. And also, I think I mentioned this in Patreon, we have a kind of record high equity in their homes. The average American has 62% equity in their homes in 2024. And that's up from 36% in 2009. And this is a huge buffer against banks foreclosing. People will not give up their castle, especially when they have so much equity in it. So I think it's not a problem. In short, better underwriting. Borrowers aren't in over their heads. Borrowers aren't getting in multiple properties. There's no rampant property flipping. In fact, there's no flipping at all because the market's dead. It's completely different, and we don't have the same systemic risk that we had last time. So from that perspective, we're good. It's not a global financial crisis. However, the market dip is actually worse than the GFC. GFC was kind of like one bank hit the wall, bang, another bank hit the wall, bang, another bank. It was like a gradual decline. This one was extremely fast. So I hope that helps.